All right. Well, it's 12 o'clock. Let's go ahead and get started. As folks trickle in, we'll go ahead and welcome them. Hi, my name is Nathaniel Carroll. I'm the Executive Director of Volunteer Lawyers and Accountants for the Arts here in St. Louis. I know that just from the registrations, we'll be joined by some folks from Missouri, Illinois, Texas, maybe one from Kansas, it looked like. So the information that we're going to talk about broadly applies to nonprofits that are organized in any state. That said, if you have any state-specific legal questions, today is not a legal clinic, and so when I get down to my disclaimer, I'll remind us that. But this is for educational and informational purposes to help you and your nonprofit work through budgeting. So thank you for joining us. A quick overview of VLAA. We provide a bunch of different services, and they're displayed with these cute little icons on the screen. Our main bread and butter is advancing the artist careers and strengthening nonprofit cultural organizations, and so that's why you all are here. We provide pro bono accounting and legal services by real professionals. For nonprofits that are existing, if your operating budget is under $1 million a year, then you qualify for free assistance. So that's probably most folks on nonprofits, or most folks that are involved in nonprofits here. For individual creatives and creative small businesses, if your income is 300% or below the federal poverty level, then you qualify for pro bono services. If it's above that, we also have referrals that you can get to attorneys that you work out or accountants that you work out your own fee agreements. You're attending an educational program or workshop here. We also do community building events here in St. Louis. And in the fall, we'll be going to Columbia, Missouri to take the VLAA show on the road. We do serve outside of the St. Louis region, all the way westward to Columbia. So everything from Columbia and eastward to Missouri, and then all of Southwest Illinois too. So we're here for lots of folks, and we try to go out in those communities and get a couple touches each year to strengthen the fabric of our cultural and arts community in the region. So here's my disclaimer again. This is just for educational purposes today. This is not intended to serve as a substitute for professional legal or accounting advice or services. And I'm going to say this a lot, but if you do want legal or accounting services, reach out to us. That's what we're here for. Any arts-related issue or any issue related to your arts and cultural nonprofit, we're here to help. So I've got the chat enabled, and this is a meeting style. So if you have questions and it feels appropriate, you can come off mute and just ask them. But does anyone want to just share what they believe is a reason that we need budgets as nonprofits? I mean, one reason that I can think of is that you need to be able to plan for opportunities and challenges for your organization. And we'll talk a little bit about some of the other purposes of a budget as well. Before we jump in, I'm going to share a very short video and song by Lewis Cole that I think I sing it to myself almost every time I engage in this particular type of activity. And this song is called Bank Account.
Bank account.
There we go.
I'm too scared to check my bank account. I don't afford to check my bank account. I'm too scared to check my bank account. Check it, check it. Check it, check it. Don't want to check it.
All right. So you get the idea there. It is sometimes scary to check our bank accounts if we're not keeping track of our spending and our revenue, the money coming in and out. And so in addition to just checking the bank account, that might show you how much money you have at a particular point in time. The budget helps us plan ahead on how to spend the money, especially because most nonprofit organizations don't get a steady monthly stream of income. We often get a lot of it at the beginning of a fiscal year or whenever the grant cycles are coming due. And so that can fluctuate. And that's why it's important to plan ahead. So real quick, we've got a couple pages of glossary terms that I'm going to walk through just so that we all have some of the same language. Accounts, when we talk about accounts today, we're not talking about necessarily bank accounts, but rather a bookkeeping term that describes the category of income, expense, or program-specific activity that you track in your budget. We'll talk about assets, which just means everything the organization owns or is owed. So pledges that have not been realized or have not been received yet are assets that count toward the overall assets of the organization. The budget, that's what we're talking about all day today, is a financial plan that outlines expected income and expenses over a fiscal year. Nothing more complicated than that. Sometimes we'll talk about controls, which are policies or procedures, or could be mechanisms that your organization implements so that you can safeguard your assets, ensure accuracy of financial records, and prevent fraud. So one example of a control might be that if a check needs to be written over a certain large amount of money, that it has to be signed by both maybe one of your directors and someone on the board, like the treasurer or the board president or secretary. That's one thing that we have here at Volunteer Lawyers and Accountants for the Arts. And most of several of our board members on the executive committee have access with logins to our bank information. So anytime they want to check in on the financial position of the organization, they can. We'll talk about expenses, which are outflow of money or utilization of assets that are incurred in fulfilling your organization's mission. A liability is everything the organization owes to others. The net assets is the difference between assets and liabilities, so assets minus liabilities. Revenue is just all the money that your business earns from selling goods or services, providing programming, or from donations and grants. When we start nonprofits, we don't always think about them in terms of a business, but that's exactly what they are. And then there's two different terms that are unique to nonprofit accounting that it's helpful to have this, to know what these are, because they're a little bit different than the sorts of things that you hear in the for-profit business world. But statement of activities is essentially an income statement or a profit and loss statement. It shows financial performance over a specific period. So typically, each month, if you're reviewing your organization's expenses and income, then you look at a statement of activities that says from the beginning of the fiscal year until this month, here's where we are so far. And then a statement of financial positions is sometimes called a balance sheet. And that shows a snapshot at a particular point in time that might show the assets of the organization, which are the positive items, the liabilities, which get subtracted, and the remaining value that the org can dedicate to its mission. So the boiled down, the statement of financial position is essentially liabilities plus net assets. And since liabilities are negative, you might also just say net assets minus liabilities. Okay, today we're going to go through three main categories. Most of our discussion will involve the first category, which is nonprofit budgeting guidelines. There are 10 of those that we've laid out, and then we'll talk about what data and tools you need to work on your organization's budget, and then we'll close with where you can get help. And spoiler alert, it's through VLAA. Okay, so every budget must have these 10 considerations. These are just best practices for your organization. So a budget must be balanced, and we'll talk about all these things. So you need to include conservative revenue projections, plan for a cash reserve. You need to account for the true cost of operations, not sort of ballparking it as best you can. Your spending should align with your mission and strategy. We're going to talk about restricted versus unrestricted funds. And whenever we get into that, we'll talk about how some donations or grants are for particular programs or initiatives that you need to treat a little differently in your budget. Your budget should also plan for growth, not just look at what's our budget for this fiscal year, but what are we hoping to accomplish in the next 3, 5, 10 years, and how and what do we need to do to be financially ready for that? It should be reviewed regularly. It's not a once a year kind of document. Every month when you're looking at your finances with your treasurer or with your bookkeeper, it's good to review compare the spending next to the budget, because that's essentially, here's what we promised to do, here's what we've actually done, and here's where we went over or under. And those are all learning points for next year when you make your new budget. You need to budget for people. What that means is nonprofit organizations don't run on their own. They need the people who work there. And so part of having employees is planning for the cost of them. So if you have full-time employees and you want to keep them around, plan for building in paid vacation days, plan for benefits if your organization can afford those, and plan for annual or biannual increases for wages, for cost of living, or to stay competitive in the market. So it's not going to be a surprise that life gets more expensive each year, and so we want to make sure that we budget with the people in mind, and invest in them. And similarly, the budget should reflect the morals or the values of your organization. How we spend our dollars is a form of speech, and it speaks volumes when an organization puts its money to good use and can show that we've budgeted as much as we can toward providing programs and services for the community and for the clients and people we serve. So let's jump in. Any questions so far, though? Just shout them out. I'm monitoring the chat. Someone asks, okay, we say to track expenses, spending, profits, and grant writing and donor reporting, not spending. Oop. What's going on? I think maybe I'm confused by the otter that is that is taking notes here. Okay, someone asked if something is the same as cash flow report. I think you mean a statement of financial position, and the answer is yes. So let's dig into the guideline number 1. Your budget must be balanced. Projected expenses should match or be supported by realistic projected income. So you want to make sure that you avoid adopting any budget that's overly optimistic, or that you can set a goal. It's okay to set a goal of, last year we raised $10,000 at our trivia event. This year we want to raise 15. That's a great goal, and you can put that in the budget, but make sure you also have a plan to back that up, so that you're actually bringing that money in. And similarly, if you know that your event is going to cost $5,000 to put on, don't be too optimistic and think that there aren't going to be unforeseen expenses. Don't think that year over year it's going to stay the same. Always make sure that you're anchoring those numbers in reality. It's okay to plan for deficits too. A nonprofit doesn't mean you have to lose money. You can make money year over year and save it in your reserves. But sometimes you need to take a deficit. You need to spend something extra because an unforeseen opportunity might come, or if a strategic investment opportunity is in front of you. But and we'll talk about how to determine whether you can make those deviations. But ultimately, your budget needs to be intentional and supported by reserves or a clear recovery plan if you do dip in to reserves or a deficit. So if your expenses exceed your expected income, then that's a good opportunity to look at what expenses in our budget can we reduce, what additional revenue can we pursue, and what programs can we phase in or out over time to affect our bottom line. Okay, next, it's good to have conservative revenue projections. So don't assume that grants will renew, that if you've gotten a grant already, don't assume it's going to renew unless it's reasonably likely. How can you find that out? Pick up the phone and call the grant issuer. Call your contact person at the Missouri Arts Council or the Regional Arts Commission or the Whitaker Foundation. Those are some, at least here in the St. Louis area and in Missouri, sort of some big players in the grant making circle. They have many people on staff who their job is to help people through the grant application and administration process. So you can always talk to those folks. Those are the people you want to maintain relationships anyway, so that it increases your chances year over year of renewing those grants. When you are budgeting overall revenue, you want to make sure that you don't count funds that are committed or that are for a specific purpose as general operating revenue. You need to make sure that if it's for a specific program, that money is spent in the program rather than money that is anticipated. You want to avoid building permanent expenses around temporary or uncertain revenue. For a few years, during the pandemic, there were sources of revenue that were made available, like PPP loans and ARPA money from the city. And so those were sort of a one-time cash flow infusion, but we can't count on those year over year. And so if you are going to receive a large one-time gift, make sure that you're planning for how that money is going to be used over time, and don't just go hire a bunch of new people without a plan for how to pay for them. And then you want to diversify your income streams. We tell this to individual artists. We talk, if you're doing your own investment portfolio, just as an individual investor or for a business, you want to make sure you don't put all the proverbial eggs in the proverbial basket. You want to spread that out. And so making your budget, especially anytime there's a shortfall in where the numbers aren't going to add up, think about ways you can, maybe you make new swag and sell it, or, maybe you make that extra call to donors. But always, as you're making your budget, you're going to be identifying some to-do tasks, like some action items for yourself, because it's not just like once we get the budget done, we're off the hook. Once we get the budget done, we're going to know here's the work we need to do to make sure our organization is financially sound in the coming years. Which brings me to number 3, which it should be number 1. This is very important. Every organization should build a cash reserve. I said it before, and I'll repeat it. Nonprofit doesn't mean you can't make money year over year. What it means is that you don't take those profits, the money that's the excess revenue, and distribute it to shareholders. Instead, the money needs to be reinvested in the organization to continue the work of your mission. And so the way to do that is to set up a cash reserve. It can help your organization respond to emergencies like a pandemic, for example, or a tornado. A lot of creative arts groups here in St. Louis that were in the University City and on the north side. In addition to all the people that lost their homes or had damage, several of our organizations that we support also experienced damage. And you need to be able to respond to those emergencies. Even if you have insurance for that sort of thing, sometimes you need cash to respond in real time. It's also helpful when grant payments are delayed, or when You don't know exactly when that money is going to come in, but you know that it's committed. There are going to be months where not a lot of revenue is coming in, from your sort of day-to-day streams because you're waiting on this big grant. You want to make sure that you have money in the bank that you can use, you can draw on, and then replenish in those situations. Also, similarly, if you have lean periods of time, let's say a funding source falls through, or they have to restructure how they're doing grants, and they say, this year we can't help you, then you need to be able to use some of that cash reserve to make sure that if you're filling any gaps in terms of personnel and payroll. And then now and then new opportunities come up that could be enticing for an organization. It could be an opportunity to collaborate with another organization, and that could cost money to put on a new program or something. And so having a little bit of money set aside for new opportunities is good. Many organizations, the goal is to gradually build reserves that are equal to 1 to 3 months of operating expenses at minimum. And so you can figure out what your monthly expenses are by budgeting and dividing it up by 12. Pretty easy. And so you want to make sure you have 1 to 3 months operating expenses in there. And the longer term goal would be about 3 to 6 months when feasible. And that will prepare you for most disasters or unexpected expenses. And it's okay to dip in. It's okay to break the piggy bank open, but plan to replenish it. So when you are doing that, if you are dipping into your cash reserve, that again is a good opportunity to say to yourself or to talk with your team, all right, what can we do this month to bring in an extra number, extra $1,000 to replenish when we dipped in to our cash reserve. So that is the opportunity to reflect and investigate what happened, what went wrong. Maybe it's just the time of year is slow in revenue, and so we can plan for that next year. Okay, good. All right, next, you want to budget for the true cost of operation. So now we're kind of getting into the weeds of the different types of expenses you're going to see: staff compensation and benefits, insurance, technology and software, professional services, and that might be a smaller line item for folks that are in VLAA's category or region, because we can help provide some of those professional services for free. But that would be lawyers, accountants, consultants, executive coaches, maybe. Facility maintenance, whether you rent your space or operate out of your own building, you're going to have some expenses for maintenance, and you want to plan ahead for that in the same way you do with a home or a vehicle. You can also plan for marketing and outreach, fundraising, training and professional development, and compliance or licensing requirements. So if your organization employs professionals who have to get continuing ed or have to, in order to maintain a license, or they have to pay annual dues, that's the sort of thing that you're budgeting for. Those are all this sort of sneaky little costs that you might not always think about. So the stronger infrastructure, the stronger your programming can be. Okay, we're about halfway here. Checking in, toss any questions in, or just come off mute and chat with us. Your budget should align spending with your mission and strategy. So every time you have a major expense, you want to make sure it connects to your organizational goals. So if you're evaluating, how do we figure that out? Ask yourself, does this advance our mission? Does it improve the sustainability or impact of our organization? Is this the best use of our limited resources? And can this expense generate future capacity, revenue, or community benefit? And so we have a helpful tool that we're going to share with you in the post seminar email. It's called a strategy screen, and it sounds strategy filter might be a good name for it too. But I'll show you an example of VLAA's strategy screen that I pulled from our board of directors manual. So at VLAA, this is the strategy screen that I use. I'm a new executive director as of March, and so I have to check this document often when everyone reaches out with new opportunities and asks us for things. My impulse is to say yes, let's do it all. Not just because I'm new, but that's just my personality. And so the strategy screen is designed to help me parse out, is this opportunity something that fits with our organization? What kind of questions do I need to be asking? So for VLAA, this revised decision-making tool uses criteria like capitalizing on or strengthening, capitalizing and strengthening our capacity, stakeholder buy-in, increasing our visibility to evaluate new opportunities. So our goals for programs and services are to build capacity for individual artists, small creative businesses, nonprofits, and to connect with college students. We also have a goal of taking an active and vocal role in arts advocacy. In terms of the people that it impacts, our goals are to increase volunteer recruitment, engagement, and satisfaction, and to be an employer of choice, and to have a diverse, engaged, active board. And then finally, we have goals for fundraising and visibility, of diversifying and expanding our funding and raising our visibility in the community. So that's one example of a strategy screen. We came up with that at a board retreat. But here's the tool that I'm going to share with you where you can map out your own strategy screen and customize it however you want. You can either use sort of a bulleted narrative format, or you can use, oh boy, this is a strange slide. Anyway, all right, so what you're supposed to see is this chart here that you line up your different options. If you're trying to make a decision about what to do for your organization or what road to take next. So I'll clean this up when I send it to you guys. But there's 6 questions here. The first question is, is this strategy consistent with our mission? Does it build on or reinforce our current competitive advantages? Will we break even or produce a surplus within 12 months? Will it yield, or will we have a source of funding dedicated to it? Will this yield a result that is sustainable and it's not fleeting? The opportunity or the option will not put us in competition with ABC or XYZ organization because our collaborative relationship with them is essential. And then finally, will this reinforce the community's view of us as their provider of choice? So most of the time you're going to find opportunities that meet some of those things, but a lot of times the opportunities you're going to have to evaluate with our limited resources. Is this going to advance our mission, keep us the same, or distract us from the mission? So I'll clean up this chart and send it to folks afterwards. Okay, so budgets should account for restricted versus unrestricted funds. So some of the revenue we get as nonprofits is for a specific purpose. When we apply for grants, there are typically 2 types of grants that we apply for. One is sort of the program-specific grant, which are programmatic, and that would be grants that are used for particular activity or service or program that your organization provides. And so your organization doesn't exist simply to operate itself, but to provide something to the target members or the target communities that you're serving. And so you really want to make sure that when you're applying for a program grant, that you're accurately describing, here's what it costs, here's how much money it might bring back in, and the total project is, let's say, $10,000. And so if we get the grant funding for that, we know that those $10,000 are for this specific program. If we are short in another program, we can't dip into that. And so it's good to delineate those things in your budget. And it also helps maintain clarity about what funding is flexible versus designated. Okay. Sorry. The other type of grant that we the preferred or golden standard is an operational grant, which is typically awarded to an organization to do with whatever they please, whatever the money is needed for the organization, that it be put to that use. And so it's harder to find operating grants, but they're out there and they provide a lot more flexibility. All right. Your budget should plan for growth. We talked about this before. Growth is exciting, but it can also strain your organization if you don't have infrastructure in place so that you can keep up with the growth. So before you expand programs or staffing, think about the long-term sustainability of the organization and of with multiple staff people. Think about your capacity or your organization's, whoever's in charge, their supervisory capacity. Cash flow timing is also important. So as you're putting your budget together, you look at each month in the calendar year or in your fiscal year, especially if you look at them year over year and compare previous months to, each January compared for the last 3 years or so, you can start to see what months are sort of cash flow positive, what months are cash flow negative. You're going to have big expenses that might be due, all your website renewals or your professional insurance or your general liability insurance. All that stuff might come out as yearly payments all at once, and you just need to be ready for that so that you don't get surprised and overdraft or bounce a check to your insurance, because that's important. And B, you can plan ahead, set aside a little bit of that money each month, or when you do get an influx of cash, lag 1,000 of it or whatever it is for that bill that's going to come to once a year in March. Okay, and you also need to think about your administrative workload. Adding in new people can build capacity, but it also requires capacity from someone else to supervise and sort of handle the administrative things, and that includes payroll, taxes, employee benefit administration. So if you've got multiple people on your team, check in with everybody, especially at a nonprofit. They, talk to everybody who incurs expenses for their programs or their job about those expenses. Find out, if you're trying to save money, that's a good source to talk about, or a good source of information, I should say, for planning your next budget. Is, what are you spending on our payroll services, and are there cheaper options, things like that. So sustainable growth is healthier than rapid overextension. That's the message there. This is the maybe less fun part, but you should review your budget regularly. Definitely, VLAA each month before our board meeting. Our wonderful volunteer bookkeeper, who's an accountant and a board member, Susan Hagan. She keeps our books, and so she and I meet a couple weeks in advance of the board meeting. We pass papers, meaning I share all the receipts that I've got for the expenses for that month, the checks that I've deposited. We pull the bank statements and then hand it over to Susan, who enters the expenses in our books. Not everybody's going to have that. If you're a nonprofit that feels like you're sort of graduating from keeping track yourself and you need someone else to help you, then VLAA is here to help you find a volunteer accountant who can check in with you either monthly or quarterly to help with books as well. But once we tally all that up, Susan produces 3 spreadsheets. One is the statement of financial position that we talked about earlier. That shows that at this point in time, here's a snapshot of how we're doing. What are our assets? What are our liabilities? What can we, you can kind of like look at it and project out to the end of the fiscal year and see, are we going to be solvent? Are we going to take care of our bills and still maintain our cash reserves? Or do we need to get creative and think of something else? It's also good because it helps you communicate with your leadership and your stakeholders. So your stakeholders would be maybe large donors or grant writing organizations, or grant making, I should say. And the leadership could be the executive director of the organization, but all nonprofits have board members who are supposed to, they have a duty to be responsible for the finances of the organization. And so the more you review your budget, the more familiar you'll be with it when it is time to talk to the board. And so if the board says, you know what, I would love it if we would do a trivia night, which is something I hear at our board meetings. And there are lots of trivia nights all over town, but they're also very expensive to put on because people typically want some food and you need a big event space. And so talking about, well, here's what we have in our budget for putting on fundraising events, and right now we haven't budgeted for it. That's a good sort of seed to plant for the next conversation of, if you really want to do the trivia, I need your help, board member, or all the board members, to go out and find corporate sponsors to offset the costs. And so pointing back to the budget is a good practice, even if the rest of the board, month after month, just sort of glances over it and says everything looks good. It's good for you if you're communicating with your board or with leadership that you check it out. And so that sort of ties back into that video I showed you. Don't be afraid to check on these things. That typically when you're getting, sometimes in our personal lives, we know what's in that envelope. It's a bill and we don't want to look at it right away. So it's easy to set aside and maybe forget it. You obviously don't want to do that with a nonprofit organization either. And hopefully you don't have the emotional anxiety of, our nonprofit got this bill, I personally, can't pay it. So check it. Don't be afraid. It's only scary until you open it, until you look at the account, you look at the budget, because that's information. That's all you're doing. You're collecting information and making decisions based on that. Okay, we want a budget for people. Burnout and turnover costs money. It costs money not just in terms of the time, of the hiring process. You might have to hire a consultant or a headhunter. You might have to pay for classified ads or job postings, and then it's going to cost you money in the form of your time. If you're a small organization, each of us has a role and the time, and only a limited amount of time in the day to complete all the tasks. And so if someone's burnt out, or if they lose, or if you lose an employee, then you're going to have to make up for that time. And so how do we keep employees? We want to think about budgeting for fair compensation, look at market rates for a similar type of work at a for-profit corporation and a nonprofit. There are some groups that do paid studies, or you can buy market salary information and get pretty specific there, but it's costly. And so one way to determine whether or not you're offering fair market rate for, let's say, a reception position is to look at other receptionist jobs that have salary information on them. Is yours competitive? If not, and you can't afford to be, what else can you do to make your business more attractive? And there are essentially free things you can do, which is offering more paid time off. You also want to budget for contractor payments that reflect professional value. So sometimes, at least at Volunteer Lawyers and Accountants for the Arts, most of the good work we do it's fueled by the goodwill of our volunteer lawyers and accountants who, we place artists and nonprofits with volunteers, and then they take it from there and treat them just like a normal client. They just don't bill them at the end. But if we needed to hire a lawyer for an issue, then we would budget for paying those professionals. You also want to budget for manageable workloads and payroll and tax benefits, and then succession or backup planning. So at VLAA, Sue Greenberg had been the executive director for 39 years, 39 out of 40 years. She was the very first one for the org. And when she told the board well in advance, it's that eventually she's going to retire, and that's going to require some expenditure to come up with a plan. You can either hire a consultant or take the time and effort to make it on your own. But it's good to have a succession or a backup plan. And later this fall, VLAA is going to do another one of these webinars specifically about succession planning and talking about how it's important to start now, even if you're brand new in your position. Every person in every position in your nonprofit should be able and should be given the time to type up, here's what I do. If it's, you start with the job description, then you capture everything else. And then if something were to happen to me, what do we do? And so that's what you need to plan for. But when Sue announced that she eventually wanted to retire, VLAA, we applied for a specific grant actually and got some funding for it. But VLAA paid a consultant to come in and do an organizational assessment, to do the work of sort of listing out, here's all the things that Sue does, and then coming up with some action items for the board and for Sue to actually be ready when they started interviewing and hiring for the next director. Okay. All right. Finally, before we get into some, we take a look at a budget template that I've sent to everyone, and I'll send around again if you registered late. But after the seminar, you'll get a copy of it. The last piece is important, and we're going to talk about moral and value-based budgets. So budgets reflect our organizational priorities, and the budgeting process should encourage transparency, collaboration, accountability, equity, long-term thinking, and responsible stewardship of community resources. What do we mean by transparency? We mean that the budget, as a nonprofit has to make its annual filings publicly available. It's 990 filings, which is sort of the equivalent of a tax return for a nonprofit. And so posting those on your website is a great way, or has the option to post your budget online too. But within the organization, you can be transparent and talk with the employees who maybe don't have a direct hand in typing up the budget and making the decisions. But you've got to collect information and you've got to talk to them about the realistic limitations of the finances for your organization, so that that their expectations match the actions and spending of your org. We've got a question here from Tiffany. It says, our organization is small, but is growing and trying to do things more, quote, official. With this, my board is budgeting to do a professional development and conferences. Is this appropriate? I think it would benefit our org, but love insight. Yes, professional development is totally an expense that a nonprofit can pay for, you can budget for. And if you have multiple people that all have professional development needs, one way you can do that is you set a org-wide budget, let's say of $2,000 for professional development, and then you have 5 employees. Each one can spend up to, or have either spend or have reimbursed up to $400 for professional development that they find relevant to their position. So you can make it pretty simple like that. Or you can say, you know what, we're all going to go to this conference and do these team building exercises with the professional development, whatever it is, we're all going to go together and we budgeted this amount of money. And here's how much you get for your food stipend or whatever you're doing. So so definitely want to plan for that. Yes, fees for conferences and travel. You want to budget for travel as well. Any expense. And so if you're starting a new nonprofit, it's going to be hard to predict a lot of those expenses. In our budget template document, it's a spreadsheet. We have some sample categories listed out, but if you end up working with a bookkeeper, one thing you might do is ask for a chart of accounts, which is just a list of all the different accounts. And these aren't bank accounts like we talked about in the glossary. These are the sort of categories of spending and revenue, spending and earning. So have a chart of accounts so you can see, all right, we don't budget for art supplies for an event, but we do have a budget for this particular event, and the art supplies were bought for it. So we're going to classify that under the fundraiser event or the specific project. But yeah, you can also build in travel costs. One point about mileage, you're going to at some point have to reimburse employees for work-related or business-related travel, like in the form of mileage. And not every mile counts toward that. So the only time that you can get reimbursed for mileage is if you're leaving from the workplace, going somewhere else for work, and then coming back to the workplace. You can't get reimbursed if you go somewhere else and then go home. You can't get that home round trip. You can just get that piece that was sort of business to business, essentially. And so I also have a cute little chart that kind of draws out different examples of that. I'll share that with our group afterward by email as well. But what the budget does, once you have created it, you're giving that budget to grant makers when you're applying. And it shows them, how does this organization manage its money, not just so that they know whether or not it's going to be squandered, but specifically how much of it is going just for salaries. And is this grant really just about giving someone a raise, or is it about expanding the capacity to provide more benefit to the community in whatever particular service you're providing? It's also helpful in a similar way to show to donors or to the clientele you serve. If they're curious about, well, where does the money go whenever this organization receives it, that you can pull it out and show, well, here's how much goes to programming. And even a salary, like at VLAA, we have 2 employees. I'm full-time, and we have our associate director, Marissa Camp, who's part-time. And our work, like not all of my work, is just going toward answering the email or paying the bills or doing the sort of executive director stuff. I'm out giving presentations, and those are programs. And so we can say some of my salary is an expense from the program. And so it's a way of showing, look, here's actually how we're spending our time and money in meaningful ways that help our clients. Okay, so what data and tools do we need? We made it through the nonprofit budgeting guidelines. Before we dig into sort of the specifics, like here's what you need to collect up, I'm going to pause for questions, and there'll be one more chance to jump in with any final questions at the end. All right, seeing none, let's keep moving. Okay, there are a few things that you need to gather up to prepare your budget for next year. Yes, this will be a shared video and slide deck. That's a good news, Laura. Okay, so you need a budgeting tool. You don't have to spend tons of money. You can use Excel or Google Sheets, which is free. And I'm providing you an Excel template to get started. If you just want to play around with it or see what it's like to make a hypothetical budget, it's fun, and it's got formulas in it that auto-calculate all kinds of things for you. So I'll show you in just a minute. You also need to collect up last year's financial records, or maybe even a couple years. Look at, look at spending over time. Look at invoices, receipts, and bank statements from the past year, payroll records, vendor contracts. Those are, sometimes we'll say, like our lease, for example, has it accounts for a yearly increase of, I think, like 3% to our rent. And so that goes on a calendar year. Our org operates on a fiscal year from July to June. So I have to budget when I'm making this upcoming fiscal year budget. I can only take rent times 6 for the first half of the year, and then I have to factor in that increase for the second half of the year too. So looking at your vendor contracts is important, because you might catch some of those sort of increases in fees. A lot of online services will sign you up for at a promotional rate for a year, And it's easy to forget that the $20 a month is going to turn into $150 a month, after 1 or 2 years. So whenever you're, sort of as a proactive step, whenever you're signing new vendor contracts or you're signing up for new services and they do have a renewal date, calendar it, make a calendar entry, share it, invite someone else that can be your accountability buddy to that same calendar entry so that it's on multiple people's radar. And then you're going to collect up your statement of activities from the prior year. You can also, a great starting point is last year's budget. That'll show you how much you planned on, how optimistic you were, how accurate you were. And then it's a good opportunity also to see what savings you're going to be able to make, either because a program is concluded or you're not doing succession planning again in the same way or hiring a consultant for something. And then you can also see, well, gosh, we spent $1,000 over our budget in food because Nathaniel took everyone to coffee downstairs at Blueprint Coffee in our building. That's not a true story about the $1,000, but it is true. I love buying our clients coffee. Okay, so then you want to sort of jot down or work with your board to create revenue projections and funding information. So that could be grants that you've been awarded but haven't received the money yet, or pending grants that you've applied for and you have a certain percentage confidence that they're going to come through. You can get commitments from your donors and sponsors. One thing that we do with our board members when we ask them to go raise money for VLAA, they go to they're all lawyers and accountants for the most part. We send them to their managing partners or their bosses who make these decisions and ask them not just for a donation for this year, but to pledge that amount for 3 years. And so then we want to document that and make sure that we're building that into our budget as well. And then calculate your anticipated earned revenue from registration, from workshop fees, from selling T-shirts or whatever it is, that you can anticipate. Could be membership fees, and then and your annual or quarterly fundraisers, and then you want to make sure you have your fundraising goals outlined as well. And then have a list or an idea of what your program plans are for the upcoming year. If your goal is to start something, start a new project, then you're going to have action items around that. But you're also going to want to build in, how do we pay for this, or how much is it going to cost? How do we pay for it? And then how do we pay for it if we don't get grant funding? Do we still want to do it? So kind of helps you with your priorities. All right, so let's pause real quick. I'll show you the spreadsheet we've got. Okay, and it's going to be a little hard to see. Let's zoom in a little bit. Okay, so this is a spreadsheet that everyone's going to get. I sent it around yesterday afternoon to the folks who had registered by that point. And it has 3 tabs. The first 2 tabs are the budget sheets with formulas, does auto calculate. So let's say I've just kind of typed up some random stuff, but let's say we plan on raising $50,000 with some fundraising events. That'll show us a nice percentage breakdown of here's how much of our budget we're counting on. And it's essentially like, are you betting wisely on your org? And so 73% of our funding is going to come from events and fundraisers. We know that's where about 73% of our fundraising work needs to go. And also, we might want to think about diversifying some of our revenue streams so that we don't, if the event gets canceled or there's a pandemic or whatever it is, that we're not totally out of luck and that we can be flexible. So the budget starts with revenue and support. We call it revenue and support because sometimes it's donations. And so you can add whatever categories you want in here. You can do the current year, the next year, and the following year. And so you just put, so for our org, you type in whatever the date of the beginning of your fiscal year would be. So I would do July 1, 2026. That's how that works. Then down here, you track your expenses. Payroll includes all the money that's paid to your employees. Payroll taxes is how much of that gets siphoned off by the government. And typically, let's see if I did. I went ahead and put an equation in here that multiplies payroll times 15.5%. You might even do 20%. If you don't know how much payroll typically costs, or it's hard to say because you're not the one processing payroll, then a good rule of thumb is to set aside between 15 to 20% of the wages that you're paying out to people, because that's going to be paid quarterly into both Missouri Department of Revenue and or whatever your state revenue collector is, and then the IRS. And then you have various miscellaneous categories here. What I'll say is that if you have a specific project, like we can just say we're going to do a project where we host a back to school fair, and we might say that the back to school fair, we're going to put this right here. We're going to say back to school fair program, and we know we're going to spend $1,000 on it. Now we can create a new spreadsheet for back to school program, track the income and expenses on here, and then you don't have to crowd out your budget with, hot dogs, how many hot dogs you bought, that sort of thing. That's why we have these categories. Okay, so then this spreadsheet will automatically calculate everything for you and show you your income over expenses and your net surplus or net deficit. So when I thought we'd make 50,000 from trivia, that definitely put us in the black, so to speak. But let's say we're only going to earn $5,000 from trivia. So that means we're going to bring in this much money every year, 23,000. We have to spend almost 50,000 this year. So this is our deficit. It's okay to have a deficit, but you need to plan for how you're gonna make that up. And so then down at the bottom, if you either set aside a monthly amount for cash reserves, you would indicate that here, or you would essentially take, let's say, however much money your net surplus is, you want to take a certain percentage from that for your cash reserves, you would type that there. The spreadsheet also has the same sheet with no formulas baked in if you prefer to either print it or do the math yourself. So that's the tool. And then I've also included the 10 guiding principles on this tab called instructions, that to remind you. So you can, if you leave here with one thing, this document will be very helpful. Okay, I see. Oh, some takeaways from the meeting. Thank you, Otter. Okay, let me go back to our slides now, and we'll take questions and wrap up. Okay, so where can you get help? And again, the spoiler alert is from VLAA. If you just need if you have general questions about how to run your nonprofit, and you're not sure whether it's a lawyer, an accountant, or just someone who runs one, you can reach out to us. Always happy to meet one-on-one or with your board or with your team to talk about some of these things or help you strategize new ways to raise money, new programming, that sort of thing. We're here for all kinds of support for your creative arts and cultural organization. But you can also get pro bono accountants if your budget is under $1 million a year. And that includes bookkeeping consults, budgeting consults, ongoing bookkeeping. One thing that we, for larger organizations that need audits, a lot of times they ask if they can get a volunteer auditor. And the nature of an audit is that it is independent. And so no accountant is even allowed under their professional rules to do a free audit. So we can help you find auditors who you can then negotiate paid referral. And then 990 preparation. For most orgs, that are smaller, you're probably just doing an IRS 990. That is the easy form, or sometimes they call it the postcard form. It's a very short survey. It's like 5 questions on a website through the IRS. The longer 990 forms take a lot of time because they require to gather a bunch of records, your bylaws and all that sort of thing. So we see a question. Tiffany says, we budget but have found problems trying to do accounting. Can we meet twice a year to go over accounting questions, needs, and checks? You can. And I would say you would fill out an application on our website, which I'll show you how to do. You go to our website and click Get Help, and then there's a Legal and Accounting Services tab, and you click that and apply for help. And you would do that, either you apply once and say we'd like to do it, now, and then again in 6 months, and we'll set those expectations whenever we have an accountant paired. If you just want to chat, though, just email me, VLAA@VLAA.org. It's on one of our slides. Everyone should take out your phones and scan this QR code and sign up for our weekly newsletter, Briefly Stated. Comes out every Friday and lists all kinds of educational opportunities, news you can use, and other information about workshops and things that are happening here at VLAA and with some of our other partner orgs. Someone described that newsletter recently with the best 2-word review I've gotten. They said it's all meat, which I feel proud of. We try not to put in anything that doesn't mean something to our readers. So sign up for that. We also offer twice a year a 2-day workshop called Accidental Arts Administrator. And that's for anyone working in a nonprofit or starting a new one to learn about board governance, record keeping, fundraising, marketing, branding, dispute resolution, and then strategic planning. And then we also offer more webinars like this. So please take advantage of our resources. We hardly ever charge artists money. There's a small application fee for the referrals, and our clinics typically cost money for our in-person events. But we're here to serve the community. One thing that you can do, because this is all free, is please scan this QR code and take a very brief survey. It's also going to pop up at the end of the Zoom. Don't X out of it. Please fill it out. We want to get better at what we're doing. I'm new at this job, so all the feedback that you give, I will take to heart and implement and consider. So please do the survey, and that includes folks who might be watching this as a video replay. That's a good way for me to know whether it's getting good use, and your feedback is also important. Okay, so I see one question, which is Candy asks, who qualifies for the Easy 990? What's the difference? So if your revenue is $50,000 a year or less, you qualify for the Easy 990, and it's called 990 EZ, like the letters E. Sorry, that's right, Tracy, that's 990N. I think the threshold for the EZ is under 250,000 right now. This is good trivia. 200, thank you. Tracy, you're the winner of today's webinar, and I don't have a prize for you yet, but I appreciate you with the extra trivia. Okay, that's all we've got today. Thank you again for attending. Reach out with any questions you've ever got for us at VLAA@VLAA.org. Tell your friends. If you know folks who are working in the creative arts or who are creators themselves, we're here for you, and we want to meet you, and we want to hear from you and support you. Thanks again. I'll be sending around later this afternoon a follow-up email with the resources, the slides, and a link to rewatch this presentation. Thanks all. Have a great day.